sure some of you know this guy and you've seen him all around the socials. I know I have. He always looks really, really smart, just like he does today. Here he is laughing. He started in the construction industry when he was 16 and he's gained so much experience. I cannot even begin to tell you in such a short time. He's now 36. As you can see in this video, he's had a really good paper round. He is financially independent and is working very hard towards Darlow Homes becoming a major UK developer, which I know he will achieve. Ricky, thank you for coming on. How are you today?
Yes, thanks for inviting me. And yeah, it's a charm gets you everywhere, so I'm feeling a little bit better already.
Just trying to warm you up.
Yeah, that's it, yeah.
So this whole format that I've decided to do now is about people's best deal. And I want to get to people, to successful people like you, and talk about the favorite deal or a deal that you really enjoyed. So can you tell the audience about one of those deals? I know you've got hundreds.
I've got, well, yes. Yeah, when you asked me this question, obviously it was, I had to have a little think about it and what sort of scale. I guess the best one, the one that really sort of chiseled my sort of our company's growth and where we wanted to move towards was our sort of last 10 house scheme that was all sort of completed now in Nuneaton. And where you know, that doing that we faced some challenges, but say comparing that to say previous sites was going to buy to lets and then HMOs and now moving to sort of big development deals, that really sort of pushes towards, yeah, this is the direction that we're wanting to go and grow into. So that was the start of bigger deals, if you like, and that was the one that, yeah, was probably our favourite deal to date from that respect.
Wow. So how did this deal come about then? How did you find the deal?
So, because it was one of our first ones, it was nothing particularly fancy in terms of how we sourced it. You know, we wasn't using Land Insight at the time and going direct to vendor and things that we're using now. And that was our experience, obviously learning that, you know, the real value that we found is actually in the planning uplift a lot of the time, as opposed to getting sites with planning already. But we were really keen just to get stuck into a site and get our build experience up. So I'd actually built one house before, as well as building I have HMOs in London and Northampton and things, and built one house and really enjoyed that. So went on to do 10 and we found this site in Nuneaton. Literally, it was on Rightmove. It had outline planning. It was on for 280,000, which was pretty cheap really for outline for 10 houses.
Yeah.
Done the figures, it's stacked. And yeah, that was it really. And then we negotiated. I think it was on for a bit more than that, but we negotiated it for 280. And then we went on then to take it from outline to full planning, which put the value of the land up by, you know, a significant sum just doing that. So yeah, it was that was the start. It was nothing fancy, if you like. It was just a simple right move. It stuck in our criteria. It's 1 hour travel from our house, from our office, or it was our house at the time, our home office. Yeah, so that was how we found it.
Wow. So then this site's got outline planning. How did you decide what to do with the style of the houses, the layout, and all that kind of stuff?
Yeah, so we really just our main priority was to increase the GDV of the site, obviously to get its maximum potential out of it. So we worked with our architect and agents, looked at what were potentially selling well in the area. So what was the market wanting? And then also how could we get the best value out of each plot, if you like. So we had some of the plots were detached. We had some terrace, and then I think it was 4 terrace and 6 detached units on the site. And so we increased the GDV by that way. Some of them had, you know, floors in the roof space and things like that, you know, so it's like 2.5 floors, if you like. And that was just really working with the architect and your agents, just finding out what the market needs. And, you know, would we be better to try and just have all terraces on there, for example, or do you want some detached units? And that is just doing your sort of feasibility into the area, really. And that's how we determined it. And then went ahead with our planning, and it all went through. It took a lot longer than what we wanted, actually. So, as you know, that this is a slow and steady wins the race kind of game.
Yeah, it is in development. I think it's all glitz and glamour, isn't it? And people are like, "Oh, development is amazing," and it is a lot of fun. but it's just time. You know, you can buy a site with outline planning and still not break ground for a while, because you've got to go through the full planning. You've got to get those discharge of conditions, and that can just take you forever. Was there much to sort out on this application?
Yeah, there was. It took about 18 weeks, something like that. Sorry, longer than 22 weeks actually it took. Yeah, so it was a considerable amount of time, and especially you're quite eager. Can we, are we ready here and get moved? But every time, every step you're learning, So from that, I learned not to just sort of sit back and let councils do their job. I was literally on the phone to eat, so that the planning officer said, "Oh, we're waiting for transport." So I'll ring the transport officer, what are you waiting for here? And then, "Oh, we're waiting for that, highway." And it would just go around, and I would just be badgering them. And even with that sort of momentum, it was still taking the time. You can only push them a certain amount, but I think every step you are learning, and it does take time. And that was probably one of the biggest things that we learned as well, was whatever time you've got as program up to getting on site, potentially double it, if not a bit more, because it can take a lot longer than what you want.
Yeah, definitely. I think just one of the things that you mentioned there is great for the people listening just to pick up on, is that you've got on the phone. And I think that is so crucial in any business, but especially in property, just to get on the phone and see what is actually holding it up and see if you can move things along. People seem to be reluctant to do that, but I think if you get on the phone and you get relationships with people, you can push a little bit.
Yeah, don't be scared just because it's the council. You think it might mess up your application. What you soon learn is that councils are probably understaffed. They've got so much work.
Yep.
Understaffed, underpaid. What you're doing in a way by ringing and hassling, you're sort of helping them in a way, even though they might not see that. But it is because they sometimes forget where they're at with their applications, and you're sort of helping just push it along. And you have to be that all the way through, whether it's councils, architects, consultants, and everyone's so busy, aren't they? So you've got to, where they say where attention flows, energy goes, results show. And I think it's true. You need to get in people's heads and get your application or your case or your design, your project pushed forward through the realms of towards getting your end result through planning, sales. It's a constant drive. It's a constant drive to get your results you want.
It is. That's a gold tip for people listening. So you get this site. How was this site funded then?
So funding. We had probably around 100,000 of our own capital to put in, which covered sort of the rest of the planning fees and professional fees to get it from outline to full. That came from sales. As I said, I've built a house previously, and I had saving, and I think I'd sold a HMO or something at the time, or maybe just a buy to let. So I had some capital from that. And then we worked with investor finance then to fund the rest of it. So, we created like a business plan, if you like, or people call them investment packs or brochures, however you want it. But it really is a business plan of your investment document. What the deal was stacking like, really, what it would be worth when it was finished, your gross development value, what it's going to cost to build, etc., and what the returns could be. And then we had investors then. I mean, my main investor, funnily enough, is one that I actually met in the gym about 8 years ago. So you never know who you're talking to. He's a wealthy guy. He's got his finger in a lot of different investments, stocks, shares, property, business-related things. And we was obviously offering attractive rates. And he had that. I had credibility, I guess, with him before, because he's friends with me on social media a bit, so that even though we're not seeing each other every day, they can see, when I was doing HMOs or I was doing extensions with clients. I had a construction company for a short period of time when I finished work. And so I had a property background for a good amount of time and construction management delivery program. So that helped with my credibility in raising capital. So for a first deal with raising investment funds, it actually went a lot better than what I was expecting. You initially think, oh, who's going to want to lend money to our projects, but it's actually not as difficult as what you could potentially think if you're offering the right returns and you're credible enough to be able to raise it.
Yeah, I think there's a few bits of gold there as well. It's the gym, for example. I've met a couple of investors in the gym as well, and it's like you get trying to do them in the gym here, and then 2 or 3 years down the line, you've got them on social media, and like you say, you're posting, they're seeing what you're doing, so you're building that credibility. Especially the wealthy guys, they want to see where you're going to be in a year, in 2 years' time. Then the conversation could potentially go into a JV. They don't want you just knocking on their door 2 weeks in saying, "Can you lend me £500,000?" Because
Yeah, yeah,
it's not going to happen. But I think the gym is an absolute fantastic place to meet joint venture partners because you've got that shared interest, and you can build up that rapport quite quickly.
yeah. And it's not too pushy, is it? In terms of, you're just there, and it's not like you're just trying to sell them something or sell them your idea. And I
Good.
mean, social media was good for us for that as well. Not in terms of direct, like, oh, come and invest with us, but actually just putting, if you're doing something productive and useful in your field, you're putting it out there, letting people know what you're doing, because then they can let people, even though they might not be contacting you about it, they are watching. They are
Yes.
watching, and they are seeing how you're growing. So then, when you do come to approach someone, they probably know more about you than what you realised. That's so yeah, it was raising money from investors and a bit of our own funds as well.
Fantastic. And again, you mentioned another very valid point about using social media, showing the value that you're giving, because people need touch points. And if they can see that you're doing well, then that's going to definitely help. So you've got this now, you've got it done. Well, you've got it bought, you've gone through the planning. Now you're about to break the ground. What happened during the build?
What happened during the build? Obviously, I'm not going to sit here and say it was all smooth sailing, because there was some things that happened, some that you're out of your control, which made it difficult. I mean, we initially it went very well with the groundworks. We had excellent groundworks there, and it was quite a tricky site. There was 200 meters of retaining walls to build on it, a mains foul and storm sewer diversion. Huge attenuation tanks, some really quite technical ground stuff for a big site like that. Sloping site, heavily sloped as well. So all these problems that we from having good contractors in, sort of overcome them, and that's one thing that you have to spend quite a bit of time when you're tendering. If you are, because we were main contractor on that, so we had site manager or project manager and then individual work packages, as opposed to going paying a main contractor just to deliver it all. So we acted, but that didn't phase us because we came from a main contracting background. Myself, working as construction and site managers for years before, so it was sort of a natural sort of tendency to do that. But even still, with all of that knowledge, all of that background, degrees in construction management, diplomas in construction, experience, shit still hits the fan, if you want to call it like that, and there's problems. So we had a bit of our site manager started underperforming at one point. Not, we was getting messages from guys saying they was ordering materials and they're not turning up and things like this, and that went on. We got a bit concerned, and then he sort of disappeared for a bit, and it turned around his father had got terminally ill and actually later on passed away. That was something completely, out of our control. So it was a very difficult time for him. And then it was quite a crucial stage of the program as well. So we had to then go in and get another site manager to pick up for where he'd gone without really a handover either, and it was sort of starting. So you can imagine that is there's a few challenges with that, especially when you're really deep into your program. So that was a challenge in terms of management and getting the right people back on there to steer the ship in the right direction. But we managed it, and that was unexpected, but it's we overcome it.
Sounds good. It sounds like a lot of sites out there.
No, it is, and that's just what there's other issues, like our retaining walls, for example, were designed to be precast, and then as we was into the program, the designers said it couldn't work with the loading, so we had to then just hand build 200 meters of retaining walls on concrete, things. So that was interesting, and it increased the cost as well. But we had excellent bricklayers on. I think our bricklayers, the building regulations officer said that it's the best brickwork he's seen in that entire area, within a sort of 1 hour vicinity of our site.
Wow.
But I knew the bricklayers personally, this team of guys, and I knew they were really good. I knew they were competent, so they managed to deal with that well. Taking design changes, and obviously there was extra costs involved with that, which you have to then do a bit of a juggling act to manage. But we managed it. Yeah.
Wow, sounds good. How did you pick the contractors then?
Contractors. We had a QS originally that was tendering for us, and then he obviously had. But then if we had ones that we wanted to put forward for recommendation, like our brickworks, for example, my cousin's husband, and he's got a bricklaying firm, and they were basically with that, they were like the top guys on their sites for Taylor Wimpey's and things, and they wanted to start on their own. So we gave him their break of starting on ours for a really good price, to give him his break. But then we knew they were really, really good for Taylor Wimpey's. So it obviously is a bit of a, can cause problem using friends and family. And I agree with the saying, don't really use them at times. But if you know that they're good guys and they're going to deliver, then you have to take that, weigh that up a bit as well. So but mainly QS can do all your tendering for you at a cost, but then they will save you in the long run.
Oh, definitely. And a lot of the times they're used to dealing with different people. They've rated them. They've worked on many projects with them as well. So it helps you out. Exactly. Yeah, they've got their industry contacts as well, so that they know, and they know what thing, because they'll do your estimate of costs initially for you, and so you've got to give you an idea. But then when the work packages are sent out for tender, they can sort of negotiate with each package, try and get you the best price. So because you've got an idea of what that's going to cost as well from your estimate. So yeah, it's well worth having a QS. I think don't try and just do everything yourself. They're worth their weight in gold, just having professionals in each place, because you could have a tendency to try and cut corners, but that could ultimately come and bite you later on. So QS to do your tendering and a QS to do your cost monitoring throughout the project. I think that's a gold tip as well. And coming from somebody who's got a massive construction background like yourself, I think that is definitely what people should be doing. It does make it a lot easier. And that's what they do day in, day out. So it lets you focus on what you actually want to do.
Yeah, 100%. And I mean, to be honest, now with other projects that we've been doing and looking at, that we're probably we'll be appointing main contractors to do all of it. So it won't be us doing individual work packages, because it goes down to your time. Like as you say, typically you're going to pay 10% more on your construction costs for having sort of a main contractor in overseeing everything. But where's your time better spent? Is it overseeing construction delivery, or is it getting deals and working with investors and growing your business? And that's what you have to weigh up. And that was the decision we've made. That's the route we're going down on other deals and deals we're doing now.
Smart decision. I like it. So the end results then of this site, what happened?
Yeah, so we there was a few things. So the site went well. We was about a month over program, which wasn't too bad really. Got it completed, and then we sold 5 very quickly, and it was the lower end actual properties, the terraces, Help to Buy, went out the door very quickly. The other 5 were lagging a bit in terms of sales, and it was originally my intention. We was looking at just doing a complete build to rent on the whole site to retain the stock, but we wanted to have liquidity as well for future, so it's balancing out. So we had the intention, look, we'll go to sell, see how well they do sell for, and the ones that don't, potentially then hang on to them to rent out, the ones that don't sell as quickly. So that's how we sort of came to the exit, if you like, and that's exactly what we did. So we sold 5, and then I refinanced 5 onto buy to let. them. So because I'd sold a few other properties of my own as well, so I thought I wanted to retain more stock for long-term capital growth and rental yield, as well as having liquidity from your sales. So that's a strategy as well that we're going to be sticking with moving forward as well, trying to keep hold of some, not everything, but on every site is keeping hold of some.
I think it's a smart way to do it, to be honest.
Yeah, and as I said, I think we were talking to it before the call, but just having, you got a new build and having a family let, or a couple or something like that, I haven't had any complaints, any problems, nothing. It's not like where you've got 8 different tenants on your HMO from all different backgrounds and all these problems. It's easy, and obviously after 5 years or whatever, when there's a lot more maintenance needed, there's going to be a bit more involvement potentially. But at the moment, I think that's where we're wanting to go and grow is, do you go build to rent? Do you go build to sell? For us, it's having that liquidity with your sales, but then withholding some of your stock for that longer term capital growth and that sort of buffer of monthly cash flow.
Yeah, it's strange. Actually, I was talking to a vendor just this morning. Does not need money in any way, shape, or form. A lot of land, wants single lets. So if I am to build on her land, yes, I can do it, but part of the deal is I have to pay her a little bit of money, less than she'd get if she put it on the market, but then I have to provide her with a couple of houses throughout the phasing of the build.
Yeah.
She wants single lets.
Yeah, no, it is. And you can see why, because that, finance, I think, like say funding on their finance was got 3.74% interest rates, which is pretty good, isn't it? We're in a good,
amazing,
low interest, locked in for 5 years. Got good tenants, long term, they're all renewing their tenancies and things like that. So, and you keep them for 20, 30 years or whatever, they're going to be worth quite a good amount of money in the long run as well. So I think Warren Buffett was sort of saying recently that family lets, on long term 30-year mortgages are a great investment, because you've got, and I think, and I agree, they're just less hassle, but and give you that long-term picture as well of of that long-term growth. So that's what we're wanting. But if you just kept hold of all of your stock that you built, you might run out of liquidity as well. So that's why we need to keep cash coming in as well to help the growth.
That's a very smart way of doing it. I like the way that you look at things and approach it, and you protect that downside. I like that. I like that a lot. Just talking to you today it's great, and you've opened up on that, and thank you for that. So what are the biggest lessons that you've learned then over doing that deal?
Biggest lessons? That's a good question. I suppose, having very competent site management is a big lesson, because if you haven't got that, problems can arise, so, because don't try and save on your costs for your site management, for example, because they are your sort of lead coordinator on there, and if they're not driving the site or not getting things finished to the correct quality or on program, that can ultimately cost you quite a lot. So just have good management. It's like anything, you need good management and good people in the right places, and spend a bit of time with that, and making sure you just got to get it done on time and get out as quick as possible, and the site manager's responsibility is getting it done on program and on budget and on quality. So if your one isn't meeting them standards, ultimately it's going to cost you, it's going to cost you financially and give you a headache. So that's what that's probably one of the key points of that particular scheme.
Fantastic. So we're coming towards the end now. So if anybody does want to get in touch with you, how can they do that?
Yeah, so my email is ricky@darlowhomes.co.uk, or I'm on social media and things like, if you just do a search, we've got a Facebook profile of Darlow Homes, and then we're on Instagram as well, Darlow Homes. So we're on the circuit. We're speaking at different events and things like that. We've got another one coming up this month for the Cambridge, Milton Keynes, Oxford corridor. I'm speaking there about the opportunities that are within that. So that's on the 22nd of January. So we'll be down there. If you wanted to come and say hi, then please do.
Cool, fantastic. And I'll put a link to all of that information as well in the show notes, so people will be able to just click them and get straight to you. So thank you very much for coming on, Ricky.
Yeah, brilliant. Thanks. I enjoyed it.